Ladies and gentlemen, boys and girls, welcome back. Right, this video goes out to my mate Lewis, who brought up some good questions earlier and was curious as to whether right now was a good time to keep accumulating, or do we simply sit on our bags and wait at this point? Does it potentially make sense to wait until after the ETF announcements to shake out all the sell the news folks prior to taking further positions? And this got me thinking that looking ahead to where I think this cycle is headed may serve as some good context as to how I would answer this question. So, as usual, we are going to jump right in. First, I want to talk about stock to flow. Many of you may be familiar with this and familiar with Plan B, where it originated, and here's forecasting and analysis of all things crypto. Plan B is somewhat thought of a Nostradamus in the world of crypto and has been proven pretty accurate in times past, albeit the last cycle. And so I'll keep this simple. Plan B's stock to flow outlook basically divides stock, aka supply, by the flow, which is the new BTC being created each year. Then you throw into the mix, of course, the halving that essentially cuts in half that new supply, and you have the basis of Plan B's prediction. Why the hell am I bringing this up right now? Well, he recently came out with his latest BTC prediction for this cycle. And to cut a long story short, it was extremely bullish, with BTC hitting around $532. Now, I know what many of you are thinking. No way. That's ridiculous. There's no way this can happen. Plan B's approach was proven inaccurate during the last cycle, where we failed to even reach 100,000 as predicted. Blah, blah, blah. But slow down. I want to discuss this a little more, because this prediction puts BTC at a forecasted $60,000 just before the halving. That's 5 months away from now. We are currently sitting at just above 40,000 right now. And so, to me at least, this seems highly likely at the very least. Now, we've all heard about the rule of diminishing returns as cycles progress, meaning that each cycle is likely to have lower returns than the cycle before, particularly with tokens and projects that have already experienced previous cycles. Hence why we see all these people chasing the shiny new project on the block, simply due to the fact that it's probably unaffected by this rule. This rule has merit, and I would usually fully agree that BTC price or return seeing anywhere close to what it has in cycles past would be far from realistic. In fact, Lewis shared his opinion on us being dependent on new folks entering crypto, the old mantra, and being dependent on price reflecting that new adoption, which again would typically make sense, as we've seen in cycles past, to a much larger degree. But in this scenario, not so much to me. You guys know my thoughts on why I believe this cycle is somewhat unique. We are on the precipice of a lot of institutional wealth entering the market in massive amounts for the first time ever. And so the economic energy coming into the crypto landscape dwarfs, or should dwarf, previous cycles by quite a margin. We have ETFs, both BTC and Ethereum now, on the verge of approval very soon, or maybe even happening shortly thereafter. We see behind the scenes some of the biggest investment houses in the world, like BlackRock and Fidelity, making moves to position themselves as strongly as possible, as quite simply, they see what's coming. We also then see that knock-on effect happening with pretty much every major financial institution under the sun following suit. And so we can use our common sense here in making the assumption the financial world is pivoting quite dramatically right now before our very eyes. Couple this with the insane inflation that's happening, certainly here in the US, but also around the world, despite the Fed's best efforts to laboriously countermand this. And then when the Fed does eventually pivot and rates drop, it's going to probably be during a period of time where people are strongly realizing just the devaluation that's happening to their savings accounts, their IRAs, their 401ks and pensions, all the while at a time where it puts more money in their back pocket, and they're more than likely wanting to put that into safer places than their fiat banks or their fiat-based financial products. Throw in the upcoming expense of more macro catalysts like regional conflicts and trade route closures, and we have ourselves a nice little melting pot of crypto motivation and stimulation that's basically going to be forced down everyone's throats. So to summarize, the diminishing return ethos has the potential to be rendered obsolete due to being outweighed dramatically by all this potential economic energy at least in my opinion, giving us the runway for some truly great returns. Now, do we hit $500,000 this cycle? Maybe. Do we wait that long? Probably not. Definitely not. Why? Because, firstly, anyone with an ounce of intelligence is certainly not weighing the potential of their portfolio and how much their BTC increases in price. Not unless you have huge bags or you're a hedge fund with large BTC holdings as a hedge against possible upcoming market conditions. No, most of us are more concerned with how the matriculation into altcoins is going to facilitate our wealth growth. Derivative plays that we take and leverage that new economic energy that will, for sure, at first pour into the blue chips like BTC and Ethereum and then work its way down the system into the projects that we're holding. Now, Plan B, Raoul Paul, and a bunch of other investors you're probably familiar with online pretty much agree that the best time in any cycle to purchase your BTC bags is 6 months before the halving. Right now, we are currently 5 months before the halving. So it's kind of that time to buy. However, as many of us also know, to put it simply, altcoin season usually comes after Bitcoin season. And so, as far as applying that same 6 month rule, albeit kind of loosely, we can assume that over the next 6 months, it's going to make for some fantastic accumulation time where we can DCA into our vetted projects effectively and set ourselves up a great deal. When you boil it down, folks, it's really not rocket science. Buy early and cheap. We are in that period now. Sell when the market is high. And now looking ahead, that's probably likely toward the end of 2025. We have a large amount of time for you to work your ass off and accumulate bigger and better bags. So no, you're not late, and you should definitely continue to accumulate, at least in my opinion. I really do think this cycle goes into overdrive, inflating the numbers that we were predicting a few years ago by quite a way. And because of this, I expect our price predictions for the tokens that we're in to rise quite significantly over this time as we see the market taking shape and that bar continues to raise, because that's typically what happens. You know that I've never been scared to give my bullish or bearish opinions despite what the micro sentiment might be at any given time, because I know that's how this stuff works. So in summation, I think we hit a minimum 200K Bitcoin, which may be bullish to some of you, not bullish enough for some of you, but we shall see when we get there. I'm quite frankly going to take my prediction over any others at this point. Thank you very much. What does this mean for our bags? More than a 5x for damn sure. How much more? We're going to have to play it by ear, because while we can plan for a certain range right now, it is dangerous to base any thinking of exit timing based on current market conditions. Things change dramatically during a bull cycle, as we know. And so we got to make sure that we're evolving and adapting as the market evolves and adapts. Do we sell our tokens or refrain from buying before the ETF announcements? In my opinion, absolutely not. Do you want to be caught with your pants down when the money starts flying in and prices start shooting up? No, you definitely don't. And I think there's a very good chance of that happening if you aren't taking positions now, because you never quite know how markets are going to react. And while I do think some of those shorter trade decisions by the traders may reflect Bitcoin price going up and down, I think that's not going to have anywhere near the same effect as we start going down into the altcoins. And so we are kind of protected from that. And as I say, most of us are not banking on our BTC rewards as to how valuable we're projecting our portfolios to be. But get ready for some huge movement and some days in the not too distant future where you wake up feeling very, very good about life. Stay tuned.